What is FIRPTA, and how does it affect your real estate transaction? If you are a foreign investor buying or selling U.S. real estate, a federal tax law called FIRPTA could have a significant financial impact on your transaction. FIRPTA, the Foreign Investment in Real Property Tax Act, was enacted by Congress in 1980 to close a tax gap that allowed foreign sellers to walk away from U.S. property sales without paying capital gains taxes. Under IRC Section 897, any gain or loss from a foreign person's disposition of a U.S. real property interest is treated as income effectively connected with a U.S. trade or business. The law generally requires the buyer to withhold 15% of the sale price and remit it directly to the IRS, making compliance a shared responsibility between both parties. The withholding rate can vary depending on the sale price and whether the buyer intends to use the property as a personal residence. For properties sold at under $300,000, FIRPTA withholding may not apply if the buyer certifies the property will serve as a personal residence for more than 50% of the first 2 years. For sale prices between $300,000 and $1 million, withholding may be reduced to 10% when the buyer acquires the property for residential use, while the standard 15% rate applies in all other cases. For any property sold above $1 million, the full 15% withholding rate on the amount realized is mandatory, with no residential use reduction available. Under FIRPTA, a foreign person includes non-resident alien individuals, foreign corporations, foreign partnerships, and foreign trusts or estates as defined under the Internal Revenue Code. A foreign national who holds a green card or satisfies the IRS substantial presence test is treated as a U.S. tax resident and is generally not subject to property withholding. Entity structure also matters significantly, because a single-member LLC owned by a foreign person is treated as a disregarded entity, making the foreign owner personally subject to withholding. FIRPTA is not limited to straightforward property sales, as foreclosures, installment sales, exchanges, transfers to trusts, and even certain corporate distributions can all trigger withholding obligations. The foreign seller's actual tax liability is ultimately determined when they file a U.S. income tax return, and any amount withheld beyond what is owed may be claimed as a refund. Working with a knowledgeable attorney who understands the nuances of FIRPTA is essential to ensuring your transaction is structured correctly and all obligations are met on time. Sishodia PLLC serves both foreign sellers and buyers navigating FIRPTA compliance in Manhattan and throughout the greater New York metropolitan area, with the law firm's practice led by Natalia A. Sishodia, ESQ, LL.M., a lawyer who has worked with international clients on complex real estate matters. Contact Sishodia PLLC, the law firm located at 600 3rd Avenue, 2nd floor, New York 10016, United States, by calling 833-616-4646 to schedule your consultation with an experienced attorney today.